SoFi is currently down pre-market 8 to 10% at the time of making this video. And as you can see here on the graph, right now pre-market the stock sits at $8, which is bang on the 200-day moving average. Let's see if that can turn into a support. Now, what exactly has happened? Well, this press release got out. SoFi Technologies announces proposed convertible senior notes offering due 2029. Now, a lot of people have already been speculating, why is this happening? Why now? Why this price? What is going on? Are they doing this to cover bad loans? Are they doing this because they need to hire a lot of people? Are they doing this because they are maybe looking into acquiring another company? Well, to be honest, none of the above, because as you will see, they already explained why they're doing that. Now, of course, there might be some other things that they're not telling us right now, but I have full trust in management. Nothing in the past quarters or years have told me that management is not trustworthy. They have been executing their plan perfectly. Yes, the stock itself has done literally nothing at all, well, not much in the last couple of years, but the business itself is becoming better and better. I will also go back to their guidance for next quarter and for the full year just for a refresher, because I do think that's the most important part here. Just because this got released, which I'm pretty sure they knew this was going to happen, they already gave us quite some good guidance for this year and for the years to come. Now, before going into that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, SoFi today announced its intention to offer, subject to market and other conditions, $750 million aggregate principal amount of convertible notes due 2029 in a private offering only to persons reasonably believed to be qualified institutional buyers pursuant to a Rule 144A under the Securities Act, etc., etc., etc. Now, these notes can be converted into SoFi common stock under certain circumstances. Now, they already tell us right here, SoFi intends to use a portion of the net proceeds from the offering to fund cost of entering into the capped call transactions described below. I'll explain in a second what that is. SoFi intends to use the remainder of the net proceeds from the offerings together with cash on hand to 1. Pay fees, costs and expenses relating to this offering and related transactions, 2. Redeem its 12.5% Series 1 preferred stock, and 3. For general corporate purposes, which may include repayment of higher cost indebtedness if the initial purchasers exercise their options to purchase additional notes. Then SoFi intends to use a portion of the additional net proceeds to fund the cost of entering into additional capped call transactions as described below. So in simple terms, 1. Pay fees and expenses related to the offering, 2. Redeem some of its existing preferred stock, and 3. Pay off debt, potentially invest in the company's future growth. Now, capped call transactions, what is that? So they say here, in connection with the pricing of the notes, SoFi expects to enter into one or more privately negotiated capped call transactions with one or more of the initial purchasers or their affiliates and or other financial institutions. The capped call transactions are expected to cover, subject to customary anti-dilution adjustment, the number of shares SoFi's common stock that will initially underlie the notes, if the initial purchasers exercise their options to purchase additional notes. SoFi expect to enter into additional capped call transactions with the option counterparties. Now, capped call transactions are a type of option agreement used to manage risk and potential returns, often used in conjunction with issuing convertible debt like SoFi just did. The basic idea here is, well, imagine you sell someone the right but not the obligation to buy something from you at a certain price, the strike price, by a certain time, the expiration date. This is obviously a standard call option. With capped calls, you add a twist, a cap on the maximum profit the buyer can make. So in SoFi's case, they're selling convertible debt. They're concerned that if the stock price goes up significantly, they'll have to issue a lot of new stock at a potentially lower price, diluting existing shareholders. By entering into capped call transactions with a bank, SoFi limits the potential loss from high stock prices. Now, continuing on the mechanics of all of it, SoFi sells the option counterparty the right to buy SoFi stock at a certain strike price by the maturity date of the convertible debt. If the stock price goes up above the strike price, the option counterparty can exercise the option and buy back the stock from SoFi at the strike price. But here's the cap. SoFi agrees to pay the difference between the strike price and the capped price, which is higher than the strike price, to the option counterparty if they exercise the option. So what's the benefit for SoFi here? They limit the downside. If the stock price goes up, they won't be on the hook for issuing a ton of new stock at a low price. They just pay the difference up to the capped price. And two, they get some upfront cash from selling the option. And with regards to the option counterparty, what's their benefit? Well, they get the potential for some profit if the stock price goes up moderately between the strike price and the capped price. And two, they limit their risk. If the stock price goes way up, their profits is capped. They don't benefit from the full increase. Overall, capped call transactions are a way to manage risk. That's all there is to it. Really short summary here. Now, currently looking at SoFi, it has a market cap of around $8 billion. Now, actually, the stock is just down 6.6%, again, around that $8 mark, which is at the 200-day moving average. Valuation-wise, forward PE 61.4 times. You can clearly see that growth-wise, well, analysts are expecting EPS to grow much faster than the top line. And if we go and look back at the guidance for Q1 and for fiscal year 2024 and onwards, this is basically it. So management expects to generate between $550 and $560 million of adjusted net revenue in the first quarter, $110 to $120 million of adjusted EBITDA, and GAAP net income of $10 to $20 million. This guide anticipates a 20% adjusted EBITDA margin. For the full year 2024, management expects tech platform and financial services segment combined to grow at least 50% and lending revenue to be 92 to 95% of 2023 levels. This guidance anticipates an adjusted EBITDA margin of approximately 30% by year end, which equates to a range of between $580 to $590 million for the year. This equates to full year GAAP net income in the range of $95 to $105 million or GAAP EPS of 7 to 8 cents. Looking beyond 2024, management expects 20 to 25% compound revenue growth for the time periods of 2023 to 2026. This implies 50% compound growth for financial services revenue, mid-20% compound growth for the technology platform revenue, and mid-teens compound growth for lending segment revenue. This is expected to drive between 55 to 80 cents in GAAP earnings per share in 2026. Moreover, we see 20% to 25% EPS growth beyond 2026, reflecting both the continued growth of the core business plus the added benefit from new business lines launched in 2024 to 2026 time period. In short, nothing has changed my view, in my opinion, on SoFi, on management, on the future of this company. I will probably be adding when the market opens. $8 to me on the 200-day moving average seems like a good price to add to my position. Again, I'm not playing this on a short-term time frame. I'm playing this for years and years to come. So far, management has not disappointed me. The stock is disappointing, but hey, if I can buy more shares at cheaper prices, why not? So overall, that's all you need to know right now. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.